Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Chances are, if you've been around real estate for any amount of time, you've heard of REITs, real estate investment trusts, but you might not have heard about cannabis REITs. Well, today you will. Our special guest, zooming in from Connecticut, but based in New York, Anthony Coniglio, knows all about that. That's exactly what they do at his company, and we're going to be jumping into cannabis REITs. So, Anthony, welcome to the show. Great to have you.
Dave, thanks so much for having me. I look forward to the discussion.
So, Anthony, let's just really simplify things, and let's assume some of our listeners aren't super familiar with what REITs are. They've heard of them, but they don't know exactly what they are and how they work. Let's start with that. What exactly is a REIT?
A real estate investment trust is a form of corporation that the U.S. Congress created over 40 years, probably 50 or so years ago, to spark investment in real estate in the United States. And the key attractiveness of a real estate investment trust, or as we call it, REIT, is that it eliminates the double taxation on the real estate assets. So as long as we as the REIT comply with particular rules, notably distributing at least 90% of our taxable net income, as long as we distribute our income to our investors, we don't have to pay tax on that. And so it eliminates that extra taxation, and it's a highly efficient way to invest in real estate in the United States.
Okay, cool. And there's all sorts of other benefits as well. It's a way to get involved in real estate without dealing with tenants and toilets and trash, and in your case, harvesting weed and distributing all that kind of stuff. So it simplifies things. Plus, I think a lot of investors can invest in REITs using 401ks and different vehicles like that, that they might not be able to otherwise. Okay, very, very good. So Anthony, that's a great explanation of a REIT. Now, walk me through how you got into the whole cannabis industry and decided to open up a cannabis REIT.
Yeah, it's a great question. I've been at business for over 35 years. I started my career at Price Waterhouse. I audited banks and asset managers. I spent over 15 years at JP Morgan running various investment banking businesses. I started a residential mortgage company. I've done a lot of what we would call very mainstream activities. So the concept of cannabis to me was very, very different. When it was first introduced to me, I had a fairly visceral reaction that was really misinformed from a lack of knowledge about the therapeutic benefits of cannabis and really buying into, we don't have to get into the politics of it, buying into the narrative that's dominated the cannabis plant for the last 40 or 50 years. Once I educated myself and I understood the benefits of cannabis therapeutically.
Well, let me ask you a question, Anthony. So you were, if I'm reading between the lines, back in the day, you were kind of a traditional, staid, a little bit uptight banker type guy.
Well, I wouldn't say uptight now, Dave.
But conservative. How does that sound? Conservative.
Yeah, let's just say conservative for sure. And frankly, my first reaction was, wait, cannabis, wait, isn't that pot?
Yeah.
No, I'm not going to do this.
Exactly.
So there was absolutely a reaction.
What was it that caused you to take a second look at it? Because that was your gut reaction, as it is for a lot of people, I'm sure, even today. So what was it that kind of opened your mind to the whole idea?
Yeah, as usual, the best way to change somebody's mind is through education. And so when I was speaking with that individual, it was somebody I trusted, and he called me out on it. And he said, I don't know that you've actually done the work to be able to have that view. Go do the work and then come back and let's talk about it. And I did. I went away. I left that call and I went deep. I said, well, if he's telling me to do it and I respect his view, I should look at this. And I spent about 3 weeks going deep on it and really changed my mind, my perspective. And obviously, I've aligned my career since late 2018 focused on this industry.
Yeah, well, that's a huge mindset shift there. So maybe briefly walk me through what changed your mind about cannabis in general, the industry in general.
Yeah, I'd say first and foremost, it's the therapeutic benefits. Most people I talked to when I started researching this had that anecdotal story of a relative they knew that had cancer, that had trouble sleeping, that had issues with nausea, that had, in some cases, PTSD issues. And everybody had that anecdotal story about how it helped somebody they loved. And then I started doing the research into what are the medical findings. But given its classification in the United States as a Schedule 1 drug, you actually were prohibited from studying it properly. And so there are a lot of anecdotal studies that were done. And so I spent a lot of time looking at that. And then I started talking to people I know who consume cannabis on a recreational and some on a therapeutic basis. And it really did change my mind. Fast forward probably 6 months, 12 months into deciding I was going to do it, and I would be touring dispensaries, and I'd be touring a dispensary at 1 o'clock on a Tuesday afternoon. And trust me, it wasn't what you would have thought was in line. You saw somebody with a cane, you saw somebody who was in their 70s and hunched over, and you speak with the people that worked in the dispensary, and they would tell you story after story about the individuals that came seeking relief, seeking an alternative to get off opiates. I heard an amazing story about somebody working in a dispensary that helped someone on a 1-year journey to get off opiates due to a sports injury. So, I could keep going, but it was all of the culmination of all of those interactions that really convinced me. Now, to be sure, just a quick comment here, to be sure, yes, there is the recreational aspect of it, and many people seek, instead of a beer or a drink at the end of the week, they'll relax with cannabis. And so there is that. And I think it's actually, if you want that mind-altering event at the end of a week or after a long day, it's probably a safer way to do it with cannabis because you don't have the other physical issues that come along with alcohol.
Okay, good. Well, that's a good explanation there. It makes sense why you kind of changed your mind. So walk me through, as of 2026, what does your cannabis REIT look like today? Fast forward since
Yes.
8 years since you started it.
Yes. We're the second largest owner of cannabis real estate today by our measure that we could count. We own 34 properties across 12 states. When I say 34 properties, it's 15 properties that are cultivation facilities. I want you to think about a 50 to 100,000 square foot industrial building that's been modified or purpose built for indoor agriculture. HVAC is over and above what an alternative industrial user would do. An analogy could even be lab space. So it's indoor agriculture. The other 19 properties in the portfolio are dispensaries. And you should think about those typically as a pad site. Anywhere from 2,000 to 4,000 feet is the typical site, and that's the retail distribution. And that's where we stand today. We've deployed nearly $500 million, about $450 million of capital into the sector.
So how does the business model itself work, Anthony?
Yes, it's actually quite simple. We are an equity REIT. We are a sale leaseback REIT. We are the landlord. So we buy properties from cannabis operators. We buy properties for cannabis operators, and we enter into a long-term lease immediately upon the transaction. We don't take tenancy risk. So when you look at the portfolio, the weighted average remaining lease term is about 12 years. So it's a long duration portfolio. We'll enter into a lease for an industrial building for 15 to 20 years, or retail building 12 to 15 years. So it's a long duration asset. Given the complexity of cannabis, given the specialized nature of the properties, given the risk in this nascent industry that's growing, that's highly regulated, is illegal at the federal level and legal at the state level, it's a high cap rate relative to alternative real estate. And so our weighted average yield on our portfolio today is about 13% and grows about 2.5% every year, given our built-in escalators.
That's one of the few ways that Canada might be a little more advanced than the States, is federally, cannabis is legal here. So I think it's a little less complicated, but a much smaller market than what you've got there. Yes. That's for sure. So Anthony, okay, maybe walk me through an example, kind of A to Z of a deal, especially on the growing side, because that's a little bit more interesting, on how it started, how it worked out, where it's at kind of now. What's one of your favorite stories?
Yes, in the early part of the industry, most of the cannabis operators weren't able to lease properties, and we could get into why that is, and that still persists today. So they were using their precious capital to acquire properties, retrofit those properties, for indoor cultivation. So we showed up with a sale leaseback transaction, no disruption to the operations. They sell us the property, we lease it back to them for 15 to 20 years. They operate, we collect rent on a monthly basis and pay out a quarterly dividend.
So
Then
sorry, just for an interruption. Why? So you're buying the property from the cannabis
from the
guys,
operator,
from the
right?
operator. Why
From
are they
the
selling you the property instead of just
to monetize, they needed to raise capital. If you think about raising equity capital to put it into a hard asset like commercial real estate that has a limited return for them, it's better for them to monetize that asset, non-dilutive capital. They don't have to issue equity, non-dilutive capital, to use that capital to reinvest in their business. Sometimes acquiring another company, sometimes acquiring a license to operate in a different state, or investing in other facilities.
Okay, very good. So is that the typical way it's done? The operator already owns a property and you buy it and you lease it
That
back to,
was in the early part of the industry.
yeah,
Then it
okay.
started transitioning where they would find a property and they would say, I want to go into that property and I want to modify it for my purposes. And so we would acquire the property for them, provide them tenant improvement dollars to modify the building, whether it's the industrial or retail, for its intended use. And we enter into a long-term lease. And the third way we do transactions is called build to suits. So somebody, and we did this recently in Phoenix, somebody identified a property and said, that piece of land over there, I'd love to build my cultivation facility. We purchased the property, entered a long-term lease, and provided them capital so that they could build a 100,000 square foot building, industrial building, which is used for cultivation. So those are the three ways. And quite frankly, there's nothing specific to cannabis around sale leasebacks. If you think about Walgreens or Starbucks or FedEx, it's a technique that's used to fund real estate capital needs across all industries. So it's not specific just to the cannabis industry. We're simply taking something that works for regular way economy businesses and utilizing that here in the cannabis sector.
So I interviewed somebody else in the space a while back, and one of the risks they were talking about is because of the legal kind of gray area of cannabis, the big banks won't touch cannabis companies. And one of the risks they're concerned about is, you finance this property. In your case, you build one out, and then the cannabis operator gets going in there. But if they go belly up or something happens, then you're stuck with this massive grow up that can't easily be transferred or turned into something else. Is that a concern, or is that how do you guys?
Absolutely.
Yeah.
100% it's a concern, and it's actually it's come to fruition. When we started our business back in 2019, there were many competitors, and very rarely can you find a company that 7, 8 years later has fewer competitors today than when they started. Lots of companies have gone out of business that do what we do because of what you're just talking about. The risk and the underwriting of that risk wasn't aligned with longevity. We've certainly had a couple of people that have had to vacate 2 properties last year and looking to re-tenant those. But there are mitigants to that, right?
Okay.
When you underwrite, one mitigant that we've focused on would be limited license jurisdictions. I won't go too deep in this podcast discussion, but these are states that regulate cannabis the way they would regulate alcohol. So in my state of Connecticut, you have to go to a special liquor store in order to buy alcohol. If you go to California, you could buy alcohol much easier. You could go to a supermarket. And so the cultivation license in California is, let's call it a dime a dozen. You could get any of them. So there's nothing special to that particular property. But if you're in a state like Pennsylvania, as an example, where there's only 26 licenses, those licenses actually end up having some intrinsic value. So the chance that someone tosses the keys to you and says, I'm out of here, is much lower in Pennsylvania, where there's 26 licenses, relative to, say, California, where there's 1,500 licenses.
Right.
Each property, and also in these limited license states, many times the license is granted to the address, to that actual property,
So
creating additional connectivity. So yeah, there's lots of ways that you can protect yourself, but that's why we get the high cap rates that we get. If there was little risk in this, we'd be getting 5 caps on our transactions. That's not this industry.
Well, now you've been in the business for almost 10 years, coming from the background that you have. You mentioned the things that you like about it. We touched on a negative. What are a few things that are challenging about this business? You've mentioned a ton of your competitors going belly up over the last few years. What are the big challenges?
Yeah, the biggest challenge, and it's what we got wrong in our original, like I went back and I looked at our marketing decks from 2018, 2019. What we got wrong was the pace of reform in the United States.
Mm.
I would have thought that by 2026, we would have had cannabis reform in the US, and yet here we are still waiting. Where we sit today here in the summer, in fact, today is a noteworthy day, July 15th, because we just completed today a hearing by the DEA to reschedule adult use cannabis. A couple of months ago, the DEA rescheduled medical use cannabis. Now we sit here, that doesn't really make sense. It's the same plant. How do you reschedule a use
Yeah,
for a different podcast? But suffice to say that if you're a medical cannabis operator in compliance with state law and you have a DEA registration, you're a federally legal business today, as if you wanted to open up a hamburger shop or a coffee store. But if you're selling adult use or recreational, you're still Schedule 1, and that's still an illegal business. So, I would have thought that by now we would have been legal. Lack of access to the capital markets because of that disconnect between state and federal law, and then tag on top of it what happened in 2021. This was shortly after we went public. Rules around custody of securities. This is the plumbing of the investment universe. Rules around custody changed so that custody agents won't hold stocks and bonds of cannabis and cannabis related businesses. So if you're a fund or an asset manager that wants to invest in one of these businesses, you can't have your prime broker custody the asset, so you can't make the investment. And so that chills access to capital for this industry. So we've had a lack of reform and we've had a lack of access to capital markets now for 4 or 5 years. That's been a real headwind for the industry. But we finally feel that tide is turning, given the actions that I was talking about earlier a few minutes ago.
Yeah. Okay. Well, that's exciting. I was going to ask you, what do you see coming down the road for you over the next 12 to 24 months?
Yeah, listen, there is a stacking set of tailwinds for the industry in this business. And it starts with that rescheduling. It's significant, but also just as significant is the impending ban on synthetic THC in the United States. The state legal business has grown and grown in the United States. But you've had this hemp-derived THC being the psychoactive ingredient in cannabis, gets you that high.
Yeah.
Synthetic THC was created from hemp. Again, that's a whole nother podcast, but that product set siphoned off significant sales from this industry through a loophole in a federal law from 2018. That loophole is closing on November 12th. And as we've seen states impose bans in advance of that, we've seen actually sales for the industry go up. So we think that we're going to see a tailwind for growth in the industry with this rescheduling to Schedule 3. The industry eliminates a very onerous tax regime in the U.S. Very quickly. The U.S. Code 280E prohibited anybody who sells a Schedule 1 or Schedule 2 drug from deducting anything below cost of goods sold. So the effective tax rate was 50 to 60% instead of 20%. So you can see once you eliminate that type of taxation, the future cash flow profile of this industry improves. Plus, top line sales should be able to go up with the hemp ban going into place. Getting the rescheduling and getting those DEA registrations gets you quote unquote legal, which means this cash business can now start accepting credit cards, which is further tailwind to sales. The Supreme Court just 3 weeks ago ruled 9-0 that the Second Amendment rights of Americans can't be stripped because they've consumed cannabis. And this has had a chilling effect on Americans that wanted to participate in a state medical program but didn't want to have their guns confiscated because you have to fill out a form and you can't lie on your form to purchase a gun. And so we think that, we love guns in America, and we think there's a significant number of Americans that were just saying, I'm not going to participate in the state system. I'll continue to get it through my illicit channels. Well, now they'll be more comfortable coming into that state channel. So stacking set of catalysts that I think are going to drive more growth in the industry. And that growth needs real estate. Bring it back to New Lake. that growth needs real estate, both in terms of cultivation capacity as well as dispensing locations.
Fantastic, Anthony. Well, hey, thanks for explaining it all in everyday speak. That was very understandable. If people want to find out more and connect with you, Anthony, where should they go?
To our website would be the best place, newlake.com, NEWLAKE.com.
Just that easy. Awesome. Thanks so much for being on the show.
Dave, really appreciate you having me. Enjoyed the discussion.
All right, everybody. Thanks for tuning in, and we'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.u.com.